Are you new to real estate, struggling in real estate, maybe a wholesaler or cash buyer, and you're looking for better ways to close more deals? You're in the right place. Each week, I pick a random house off the internet, analyze it for a cash deal and a creative deal. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all while using low to no cost tools to analyze properties and craft strong offers. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. This is the weekly deal analysis. Let's get into the show. We both know you're going to get some value out of this. That's why you've watched so far. If you would, hit that like button and share this with somebody that might find some value in it also. This week's episode, we are taking a look at 2212 Willow Street in Caldwell, Idaho. And that is just outside of Boise, Idaho, for those who don't know, and look it up myself. Let's take a look at these pictures and see what they're telling us. You definitely need some landscape work here. Fence, kind of ugly looking, falling down. House needs some paint here as well. Roof looks okay from that angle. Definitely some work needed under here. Looks like they've already pulled out some drywall here. Yeah, that definitely needs work. And somebody went a little crazy with some spray foam. That door's missing. Okay. All right, well, they put some time inside and then they got a little caulk extra here. That needs to be cleaned up. Well, I would say they definitely put some money into the inside, not as much on the outside. Kitchen is dated, functional, but certainly dated. I guess there was supposed to be a dishwasher in here. And we got some busted tiles. Yeah, I'm thinking this is where the dishwasher is supposed to go. Oh, look at this ceiling. That's horrible. Mm. Need a paint job for sure, inside and out. Missing smoke detector. Oh, that's ugly. This looks like a unfinished. Yeah, it's just unfinished. This thing's ugly, but ugly tends to lead to profit. Looks like they were burning something out here. We got a big shed out back. There's the back of the house there. Hmm. All right, I think that's all we can see from the pictures. Let's see what else they're telling us here. So we got a 4 bedroom, 1 bath, 1684 square foot, 1 story, 1 car garage, which is probably that shed in the back. Agent's not telling us anything here. 32 days on the market, built in 46. Mm, And that is a huge average price range from almost 300 to 1.6 million, 29% renters, 442 homes for sale. Average household income is just under 80,000 a year. Average home value is almost 500. Average age 34. See where the experts are saying. They're saying the average, well, below the average price, but for the condition of this house, I think it's got to go a good bit lower. Property taxes are really cheap. Let's see what some of our sold friends look like. Let's see what this one looks like. 4 and 2, but smaller. This sold, say 300 for round numbers. What else we do? When was that on? Does it say? Didn't tell me how long it was on the market. Um, Here. All right, so this is what the property's listed as. Let's see what we can see here. The fence is falling down. That's pretty comparable. Driveway. Kitchen looks nice. Overall, pretty good condition. So this sold for the list price, and that was on the market for 1 day. Let's see if I can go back and get that other one. Close me that. 17 days on the market. All right. We got two pretty similar homes that sold right around where this one's listed at. This one I think is in a lot rougher condition. So how are we going to figure out our ARV or after repair value? What something's worth once it's all cleaned up and ready for market? That I think is going to be that 290. So we're going to take 70% of that as our offer price minus repairs. Pull up my calculator real quick. Oh, 290 times 70% gives us 203. And then ultimately there's probably, I don't know pricing in this area, but let's just say $30,000. So I'm going to take another 30,000 off of that, giving me an offer price of 173. We're going to take that over and jump on the invest nest, which I have pulled up here, and analyze the cash deal. If you like skip tracing, they do offer that. I will have codes down in the show notes and links that will get you 1 week for free and 50% off your first month. Try it out, see if you like it. If you do, come back to this video and let me know, hey, I thought it was great, or I didn't like it because of this. Really appreciate it. Finance details. When did they buy this thing? Looks like they bought it in 22 or 132,000 maybe. And they got another mortgage, probably a HELOC for 25. Mortgage. All right, let's break it. Oh, and they're telling us they're thinking the price is 325. I'm not seeing that. And an average rent price is 1841, which will come into play here in a moment. So that's at 1841. I'm just taking some notes here. Down, and we're just going to call this the property address. Our purchase price was going to be 173. Closing cost, we're going to up that to 4% because we're going to be paying the buyer and the seller side. Our lender is going to charge us 2 points or 2% of the loan. That's how they get paid. Cost of improvements, I do want to lump into the loan. We'll put $30,000 in there and move that to there, 25% down. I want a 30-year term, and I just got quoted a couple of days ago on a loan that was an investor loan that was 6.75. So we'll go with that number. And our rental price, this is what the InvestNest is saying. Another site I love to check is Rentometer or Rentometer. I think it's like $8 a month for the basic plan. Their median is saying just shy of 2,000. Lower 25 would be that 1850. So I think right now we're leaning up a little bit to this median price. And of course, I'm going to check HUD, and they're saying for a 4 bedroom, they'll pay 2772. That is a really pretty number. Um, so I'm not sure what the requirements are in that area for anything with Section 8, but they're offering a pretty good number. So based off of 2772, 1995, and 1841, we're going to stay conservative, but I want to see what 2000 a month looks like. Property taxes matched what they were telling us earlier. Insurance, I like to factor in $125 a month or $1,500 a year. Property manager is going to cost us 10%. Our tenant's paying all of the utilities, and there is no HOA. Our reserve fund, I call it my war chest. That is 5% for repairs and maintenance, 5% for vacancy, and 5% for capital expenditures, CapEx, and those are things like your roof, your furnace, basically a lot of just the maintenance stuff, the high ticket stuff. We plan on a 2% appreciation for the property. I like to increase my rents 2.5% per year. We'll plan on holding this for 10 years, and we are real estate investors. We don't pay full commissions. Let's see what these numbers look like. You were looking to see if it cash flowed. I know. If you haven't done so already, hit that like button and share this with somebody who else will get some value out of it. Boom. This is a great cash flowing deal at $315 a month, $61,000 out of our pocket. Our total payment is $1,000, and total mortgage payment is just under $1,000. Where's that extra fees coming from? We'll see that in a minute. So our cap rate, which is typically a multifamily thing, but that is at just over 9, which is a really good cap rate number or capitalization rate number. You take your NOI, net operating income, divided by the purchase price, and that's where you come up with your cap rate. Most cap rates that are good, you want to see between a 6 to a 9, 6 to a 10, somewhere in there. Those are generally pretty good cap rates. DSCR, debt service coverage ratio, it's an investor loan. They like to see at least a 1.1, 1.2. This one more than works at 1.32. Cash on cash return, about 6.25. And your return on investment is about 14.5%. If you follow the 1% rule, that does work here. And here's where all of our figures break out. So our total expenses or operating expenses with these figures here, plus our reserve fund, total expenses just under 17 with a $2,000 a month rental. Cash on cash return just keeps creeping up more and more. This does increase the value, or excuse me, the income. So that is our 2.5% increase on our rents per year. For roughly about 7 years at this, it will take to recoup all of the original investment. It's a little higher than I like to see, but all in all, I think that's still a great deal. Now it's time to do my favorite part, analyze the creative deal. This is my creative calculator. You can get it off my website, christhompsonteam.com. It will also have a link in the show notes down below. All right, our ARV or after repair value we think is 290. On a creative deal, I'm going to get a whole lot closer to that number. So let's try 250. See where that's at. And our interest rate, I want to say 4%. With this, we are asking for seller financing. We're asking the seller to be our bank. So PITI, what is that? That is our mortgage payment. Principal, interest, taxes, and insurance. For that, I'm going to jump over to bank rate to figure out this number. We said we're going to offer 250. I only want to put 5% down. Our interest rate is 4%. Taxes and HOA, or excuse me, and insurance is 125. Taxes. Let's round up to 73. 73 a month. And all right, so that gives us a payment of $13.32 each month, and that is principal, interest, taxes, and insurance. So put that number in, 332. And we said our potential rents are 2,000. Boom. Not nearly as good as a cash deal, that is for sure. But we'll break this part down here in a second. So our gross cash flow is 668, war chest 300, property manager 200 a month, giving us a net cash flow of 168 per month. Our cash to the seller was 5%, which is 12,500. This agent's not doing anything, but it hasn't been on the market a ton, so I think 1,500 might work. We are not getting this deal from a wholesaler, so we don't have an assignment fee. Closing cost is that going to be that same 4%. Cost of renos, we'll use that same $30,000 estimate. 2 months of holding is just 2 months of that PITI or your mortgage payment. There are no arrears, at least that we're aware of, and a good TC or transaction coordinator will cost you about $1,500. So upfront, out of pocket, you're looking at just shy of 60,000 versus the Invest Nest, which was just about 61. So there's not a ton of savings there. And there you have it, our creative and our cash analysis of 2212 Willow Street in Caldwell in Idaho. Excuse me, can't talk tonight. What are your thoughts? Cash deal, creative deal, go find a new property. Drop them down in the comments. And if you see the quiz, go ahead and take that quiz as well to see where your numbers lie. That's going to do it here for us this week in the Corner Barn on the weekly deal analysis. I am Chris Thompson, that bearded guy, the creative guy. We'll catch you next week.